This is ChangeMakers with Katie Goar, finding the right solutions for the affordable housing community.
This week's ChangeMaker is Denise Muha, the Executive Director of the National Leased Housing Association. With over 3 decades of experience, Denise has been pivotal in shaping affordable housing policies and legislation. She has testified before congressional committees and played a key role in developing landmark housing initiatives. Recognized for her contributions, Denise has been inducted into the Affordable Housing Finance Hall of Fame. Denise, welcome to the podcast.
Hi, Katie.
It is great to have you, and we have spoken with over 100 changemakers on this podcast, but I believe you have actually held your role longer than most of our other guests, going clear back to the 80s, I believe.
Yes, indeed. That makes me old.
It makes you wise is what it makes you.
That's correct. I entered the National Leased Housing Association's office for the first time in 1985 and never left. And we are a different location, but we're still in Washington, D.C. And actually my anniversary, I think it's July 25th coming up.
Oh, congratulations. Can you generalize what it was like then versus what it was like now? Are there huge strides, or are there still same huge pain points from the 80s to now?
Well, there's always pain points, but I would say that a couple things are different. In 1985 to 1988, I was doing sort of membership recruitment and meeting registrations and stuff like that. But when I was promoted to the director in 1988, I was probably the only woman in the room in many, many meetings. And I would say it wasn't until these late 90s when that began to change. So that's probably one of the biggest things that has changed in the last years. And but I will say that even though I was the only woman in the room, I was never made to feel that I was any different from my colleagues that were working for other housing organizations. And I think that I was listened to as equally or as other people, let's just say. And but I was happy to see that change over the years. And I think the other thing that's probably different is sort of how things work, particularly with technology now. But, it was back then we didn't have the internet, right? So anything that was going on, any meetings that you had were face to face. Any documents that you had to read were handed to you. Often I had to go up to the Hill just to get a copy of something to read. Sometimes I had to read it in the office that I was in because I wasn't allowed to take it out. And, sometimes we had documents that we put in a paper bag and hand to somebody else. But that's how it was. And but at the same time, it was also a lot more camaraderie, with folks, especially the young staffers on the Hill. And it was not nearly as polarized as it is today. I mean, housing was typically, and to some extent, still is a bipartisan issue. But at the time, years ago, the Democrats and Republican staff would meet with you together to talk about legislation and what may need changed or added, whatever. And, everybody got along, but that's not the case anymore. Even if they get along, they don't meet with you together. You have to meet separately with each side. And they make it harder because their bosses are making it hard. But that's probably one of the most significant things that I've noticed in that, to the detriment, I think, of our work.
I remember sitting at a housing authority in the chair and waiting for paper copies of the notice that were mailed to us. And that's how we got updated on the regulation changes.
That was something we, NLHA, did, regularly. We would get copies of things and have to mail them out to everybody. And, interestingly enough, often our members would say they got it from us before they got it from HUD. Because sometimes the field office would get the documents, but they wouldn't send them out for whatever reason, or just waited weeks to send them out. And so that was one of the big aspects of our job here at NLHA, was providing those copies of documents to all the members.
And now you guys are just emailing it in real time with analysis. You guys do a great job of that. Speaking of other things, you have testified before congressional committees. Tell us what that's been like and what you've seen as far as your influence through the National Leased Housing to be able to impact and influence housing policies and just provide awareness as well.
I think that's a big part of my job, is to educate the Hill staff and, of course, their bosses, because a lot of them, unless they're on a committee, they don't necessarily know anything about assisted housing. And, that's our job, to explain how these things work. And we don't testify as often as we used to because they don't have as many hearings as they used to have. But the purpose of those hearings is usually to amplify something that is either in a bill that's been drafted or a bill that somebody wants to draft on an issue. For example, it might be, the voucher bill that was passed in 2016. That bill was in the works in many iterations. The Hotman bill, as we call it, was in 4 or 5 different iterations, and those hearings went on for a decade. And we testified multiple times, both on the Senate and the House side, about how the voucher program works and how, it can be made to work better in some circumstances, and provide data. Sometimes we would bring in a housing authority director or developer to explain, their perspective on the program. And I think all those years of hearings, cumulatively really impact policy over time. It's nothing happens quick in this town, that's for sure. And as much as we would like it to happen quick. So, but it does matter. Those things do matter. And there are members of Congress who take a particular interest in affordable housing, and they generally serve on the Financial Services Committee in the House or the Senate Banking Committee. And over the years, we way back when, in 1998, there was a huge bill that took the tenant-based subsidy program, which there were 2 at the time, the certificate program and the voucher program. They were very similar, but they had sort of 1 or 2 major differences. And it was kind of ridiculous that housing authorities were running 2 programs that were almost the same, but had 2 different sets of rules. And so I think one of the big things that we did as an organization is we created a document that compared each program and what the rules were, where they're different, where they're the same, and what the end result needs to be for a combined program. And that document was used to draft the bill, what's called the Quality Work and Responsibility Housing Act, 1998. That our chart was used to draft that bill.
What I really appreciate that you guys do is you have the ability to dispel myths about affordable housing, and then also bring an operator's reality. And that is needed at the table when you're talking about what legislation should or shouldn't do. And so many of us appreciate your influence in that sphere.
I appreciate that. It's important to demonstrate to people that, don't work in this business how things work. And, it sounds more complicated than it is sometimes. But the best thing I think we've done, and I think other groups do this well as well, is to provide tours to the staff. So we've taken people that work on the Hill on a bus and taken them to various properties in the city of Washington and just showed them, took them, on a tour, introduced them to some of the residents, showed them the services that are provided. There's a computer room, a playground, whatever. And what's always, instant feedback from staff members. And the best thing I like to hear from them is, oh, I would live here. Because that tells you that they had a different image of what affordable housing is. And as soon as they see what we're talking about in the form of these apartment buildings, their perception is changed. And we know we've done our job when they say that.
And so often people hear when it doesn't work, and we have to remind ourselves that it is working in so many places, and not to judge the experience by the news article where it said it wasn't working.
Exactly, because they don't print articles about housing that's going well. I would say 98.9% of the properties are in wonderful condition and provide quality housing to its occupants. So it's just the ones that don't, or have either a crime problem in the neighborhood, or some ownership that has changed or failed. That's who they write about, what they write.
Let's talk about some hot topics that you're currently working on. I know you and your team just commissioned a survey about insurance costs. And this definitely has bubbled up to so many different arenas. Give us an idea of what the problem is at hand, and if you can predict solutions that are being drafted, or just start real basic, tell us what's driving these increases too.
Well, I think in a nutshell, I would say that the issue with insurance is mostly a market failure. It's the product just isn't out there. The coverage isn't out there, and it's not out there, or it's out there at a very high price for a variety of reasons. Well, let's start with what we started seeing in 2020. So right during the beginnings of COVID, we were hearing from our members that either couldn't get insurance, or that if they could, it was really high. And in some cases, they couldn't get coverage for things like assault and battery. And the liability insurance was just skyrocketing. So we did a survey then, and that proved out that, people were experiencing 20 to 25% increases year over year. And what we thought the case was, at least in the affordable world, was that insurance carriers were using algorithms to set premiums, basically crime statistics in zip code. So a property could have never had a claim, never had a crime incident at the site, and still were included in this zip code area that there was going to be a big increase in premiums. And we went to HUD and told them this was happening. And of course, they said, well, that's redlining. And they started a fair housing investigation, but it's more complicated than that. That is part of it. But part of it is, as everybody knows, that there have been an increasing number of disasters related to climate over the last many years here. And that just, keeps costs going up. And also that the carriers, they typically rely on reinsurance companies, so that it's sort of their backstop, right? If they have a lot of claims, they have reinsurers, like Lloyd's of London is a reinsurer. And the problem in the United States is there aren't many reinsurers left in the United States that are based in elsewhere, like Lloyd's of London. And so that makes insurance carriers reluctant to take on additional risk, or risk that maybe they've taken in the past but don't want to take now. So we're seeing a lot of carriers drop out of the affordable market. They just say, we don't do affordable housing. So that really limits what's out there, which also increases the premium price. And I think that we're seeing it now in the market rate as well. I'm seeing articles about regular conventional apartments and in homeowners facing higher costs. But the problem with the affordable market is that our members can't just raise their rent when the insurance costs go up by, thousands and thousands of dollars, because the rents are set according to the program rules. And so that puts them in a real bind about operating expenses. So, we've been working with a lot of groups. We did a second survey in 2023 and just basically confirmed what everybody knows. And there've been hearings on the Hill. We provided information to the Hill, but I don't think the solution is going to be legislative necessarily, at least not initially. I mean, we probably can say 10 different things that could be done to help mitigate costs. And if I'm looking at legislation, I'm looking at some kind of backstop, like, FHA is a backstop, right, for lending. And after 9/11, there was terrorism insurance, because you couldn't get insurance in the market to deal with terrorist acts. And so Congress came in, and then there's a flood insurance program. And so something like that might be considered. That's a long way off, and it may not solve the problem, but it's something. The other thing, we would like to see more reinsurers in the marketplace. Perhaps there's tax incentives that could provide that opportunity for those reinsurers to be based here. There are issues with the Federal Home Loan Bank. The Federal Home Loan Bank, I didn't know this till recently, a lot of their members, all the members, are insurance companies. And they get preferential pricing on, loans, financing, because they're members of the bank. And yet there are no requirements for them to do anything. So it would sort of be like a CRA. If you want to play, you got to pay. And maybe that payment is you have to lower your prices or have to reach a certain geographic area. And that's probably, I think, going to be the most effective, most quickly. if we can get the Federal Housing Finance Board and the Federal Home Loan Banks to agree to that. Other things, in our world, HUD could do is they could amend the way that they calculate the operating cost adjustment factors so that the rent increases would be more accurate about insurance. They've already fixed it once when we recommended to them that the data they were using was really more homeowner consumer data versus data that, reflected multifamily premiums. So, but they need to do more. I think they have to be more, aware of what the price increases are doing to these properties. I think HUD also has a responsibility in its loan programs to update its FHA requirements, because if you have a loan under the Federal Housing Administration, there are certain deductible limits. And what we're seeing in the marketplace is most of our owners have to raise, their deductibles, and they have to, some of them self-insure to some extent because they couldn't afford the insurance otherwise. So there's a lot of things that could happen. I would say in New York State, they actually passed legislation very recently that, made it a crime for insurance companies not to cover affordable housing. I think there's some effort to do that nationally. I don't know that that's the solution because there are a lot of loopholes in that. And we don't want to alienate the carriers. We understand that they have costs too. We'd like to solve their problems, but at the end of the day, we need insurance. And as it stands, these increases are not sustainable.
What is the overall threat, worst case scenario? Do you see people having to look at whether the units stay preserved for affordable housing, or is this just a cost pinch and then they're going to have to recover it in another way related to properties? Like, what worst case scenario, what are we seeing here?
I think both things could happen. I think initially you're going to see just deferred maintenance because, you pay your insurance bill, you might not be able to paint all the units or, replace the air conditioner or, repair sidewalk, all the things that people rely on with apartment management and maintenance. But I think ultimately it does come down to preservation. So where an owner can exit their half contract, they may do so because they know that based on the income they're receiving from the rents, they can't afford their insurance. They may have to opt out to be able to raise their rents to pay those claims or pay those premiums.
And in this environment, the threat of losing additional affordable housing units just kind of slowly kills us all, because that is really the worst case nightmare for us.
100%. I mean, we don't have enough affordable housing as it is. We don't have enough rental housing to meet the demand. I think there's something like 4 million less rental units that are needed, right? So affordable is always at the top of that. But, our whole effort in this organization is preserve what we have. And it's really, I guess, for me, I think it would have never occurred to me that the cost of insurance would have had an impact on preservation. I really would never have put those two things together until the last few years.
Well, it's sort of been like this operating budget line item, and you have it and you kind of move on and you worry about some of the other larger issues. But now this seems to have consumed and created itself as a large issue here.
100%.
Let's move on to another complex topic. You guys seem to have your hands on all of these hot buttons. Recently, HUD has talked about more tenant background checks, and this has kind of evolved in such a way that you and your members have started to look at the screening process and what the potential is. Walk us through what's happening in that space right now.
Well, I think that, HUD has a dilemma. They understand that, our members, their responsibility is to provide decent, safe, and sanitary housing to their tenants and make sure that that safe word is very important. And so over the years, I think people have gotten more sophisticated about criminal screening and other screening as well, credit history. And I think, HUD's looking at it like this is not, affordable housing is so hard to get. And people make mistakes in life. And they want to make sure that our providers are not being necessarily too stringent on their admission rules when they're reviewing somebody's act. I get that. So, somebody was arrested and convicted of, say, selling marijuana 15 years ago. And ever since then, they've been living absolutely crime-free life. They shouldn't be punished because that mistake that they made when they were like 20 years old. We all agree. But by creating this set of rules that frankly conflict with the law, the current law, as far as HUD law rules go and admission requirements, it puts the owners in a very difficult position, because what HUD is saying is they want owners, when they're doing criminal background screening, to have an individualized review of every person that applies. Which, one, I don't know if we're qualified to do that. Two, who has the time to do that? So instead of just having these broad screening criteria, which people have had, and in the past, if you followed your broad screening criteria, whatever it was, as long as you followed it for every person that applied, that was okay, right? You're treating everybody the same. Well, now that's not good enough. You have to do this individual. Well, that's going to be the case. You have to do this individualized assessment. Very concerned about that, because, what's reasonable to one person may not be reasonable to another. And the current tenants are very concerned because, if we are to protect the current tenants, you have to really be mindful of who you are admitting. And, is it reasonable to admit somebody that maybe 5 years ago was in a domestic dispute and assaulted, their spouse? What do we do about that? Do we feel, how do we know? I mean, what is the evidence that that person wouldn't do that again to their current partner in our unit and perhaps affect people living in the neighborhood? If there was some other assault charge, or the other thing that people worry about is if somebody was arrested for something, but they were convicted for a lesser charge because they plead to something less, right? So maybe they were arrested for, beating up their neighbor, but they pled down to something else, but they still beat up their neighbor. So, what kind of decision making, is it going to take to make sure that we keep our tenants safe, but at the same time allow people opportunities? And I don't know, there's a balance there. I don't know if we can achieve it. We're trying. We certainly get the point, but our members feel like their first priority is to protect their current. And I think HUD's just going out a little bit too far here. I think they should trust us. And we'll see what happens. So we commented on the rule that came out, which again, HUD's direction to providers kind of contradict some of the current rules on occupancy. So we'll see how that turns out. But HUD tells us there were 7,000 comments submitted. So it's going to take quite a while for them to review those comments. So I don't think we'll see a rule anytime soon. But that's the hard part of operating this housing. You try to do the right thing, but sometimes the rules get in the way of that. And sometimes not everybody is equal to the task of following those rules.
There's going to be some real consistency challenges here, even as a property management company or even a housing authority. When you look across your platform of communities, how one manager handles it, how another manager handles it, how one property handles it, then you get a new manager. And we're talking about property managers who are not criminal attorneys used to reading what felonies, convictions, plea agreements, like we're talking about a whole nother verbiage that they're going to have to individually decipher what happened and then try to be able to defend whether it was consistently applied across the board. This seems to be a conflict with fair housing and how that initiative is supposed to apply out in real terms when accepting people and denying people. So I don't know even how this gets navigated and consistently handled were this to become the case.
It's going to be confusing. There'll probably be the litigation, I would imagine. And of course, we're concerned about liability. What if our manager makes a decision about an applicant who, ends up murdering, his next door neighbor, that we knew that there was some criminal record. That's always in the back of their minds.
How are you advising your members on this?
Well, until the rule is final, keep doing what you're doing, but be reasonable. We don't think it's reasonable for your tenant selection plan to say you're not going to accept anybody that was convicted of any crime, anytime, anywhere. If it's, 20 years ago and it was a, minor drug crime, that shouldn't affect their ability to live in the apartments that we manage. But, again, if it was 3 years ago, different story. And if there was, depending on the amount of drugs was, I think we're just asking them to be reasonable and consistent. As you mentioned, consistent is always important, because even when you are following the rules, or you think you're following the rules, if you don't apply them to everybody equally, you are, in jeopardy of being challenged by fair housing. And we all have members who have been challenged because they maybe made a mistake in the application's response letter, that they generated the incorrect letter that went to the tenant, and then instead of being able to fix it, somebody comes in and they sort of try to create this situation where there has to be a voluntary compliance agreement, even though they really didn't do it. They just made a mistake, and it was certainly not meant to keep somebody out. It just happened. Those things happen. That's what we're going to see more of, and that's what I'm worried about, because those are expensive and take a lot of time to deal with. And I think that there is a balance between enforcing fair housing and like going crazy about it, because the computer spits out the wrong letter. It shouldn't cost the property owner $300,000. That kind of thing to happen. And there are these groups that's their job, is to go around and try to find any kind of error or something that could be perceived as discrimination, even if it was just an error, and create some kind of voluntary agreement.
Operations and resident empowerment programs suffer due to this situation, really complicating efforts to preserve and expand affordable housing. While operations have changed, issues like this significantly impact them. It's commendable that you're tracking this and advising your members accordingly, and I want to get into more of your programs, but we have to stop here. Coming up next time, Denise Muha, the Executive Director of the National Leased Housing Association, will discuss the ripple effects of the lack of affordable housing.
Regardless who's leading the country, that's just a fact that we have an affordable housing problem. And you may not think it affects you, but if you run a business, it does affect you, because you can't find people to work in your dry cleaners or the store or whatever, because they can't afford to live anywhere near where that is. Especially, this area where I live is very expensive. And you see that everywhere you go, that the staffing levels are way down because people can't afford to live, in these communities.
Thanks for listening to ChangeMakers with Katie Goar. To find out more about Katie, go to quadel.com. That's QUADEL.com. This has been a production of Forbes Books Radio.